we have an unusual split screen character to the economy today, in the sense that the period between now and full distribution of the vaccine is a period of acute need. And post-vaccine, and I do mean post-universal distribution of the vaccine and post-vaccination of a high percentage of Americans, we should see strong growth. Now, it's interesting that this is very different than the conditions that Mr. Biden found upon becoming vice president in 2009. It's a really interesting contrast. At that time, the stock market was falling, unemployment was rising, the economy was weakening, and the worst was yet to come. Today, it's quite different. Unemployment is falling, the economy is moving into recovery mode, albeit fitfully. The market is rising, and the outlook is better. And so here we have a more temporary but acute need than we had at the beginning, for example, of 2009.
Roger, let's turn, if we can, from your role as economic statesman to your role as head and founder of Evercore for a moment. Give us a sense of how the C-suite is reacting right now to the Biden transition. What is the sentiment in the C-suite? Are they in a panic about possible taxes and need to get deals done? Are they looking forward to more stability? What's their attitude right now?
Well, let's just step back a moment to a month ago today. A month ago today, we were within a day or two of the election. And today, a month later, the reaction of at least the large-scale business community in this country is one of giant relief. There's no doubt about that. The business community is looking forward to a period of greater predictability, stability, more thoughtful approach to governing, and the like. So the answer is lots and lots of relief. You have different views in the business community as to whether they think divided government with the Senate in Republican hands and the White House in Democratic hands is a good thing or a bad thing. Some think it's good because it imposes limits on what can be done, and some think it's bad because it means gridlock. But generally speaking, the business community is very much welcoming this new administration. No doubt about it.
Roger, are you seeing, or might you anticipate the possibility that at least for some CEOs, their eyes might turn overseas more than they did under the Trump administration? Because there was a lot of trade strife. We know there were a lot of issues, a lot of sanctions, things like that. It appears that may ameliorate somewhat. And also we see actually right now, we're seeing the stock markets, for example, overseas really come back strong. Does it open up more international deals?
At the margin, yes. But David, keep in mind that if you are a multinational with, say, for example, half your revenues outside the U.S., you don't have the alternative of paying less attention to your non-U.S. business. You have to. And you have to do that whether Donald Trump is president or Joe Biden is president, whatever is going on in the Congress and so forth. At the margin, yes, I think, again, the business community will welcome a greater degree of predictability and stability and a less tariff-centered international economic policy. They're going to welcome that because the tariff-centered approach that President Trump used did not work very well. Just look at the way China managed to succeed despite it. And so I think the answer to your question at the margin is yes.
We talked earlier about what looks to be good news on the horizon sometime next year with a widely distributed vaccine. Is the business community, and particularly the leadership of the business community, are they anticipating a possible, let me call it snapback, that in fact things might get better really fast after that happens?
Well, it depends a bit on the business you're in, of course. But I think the answer, generally speaking, is yes. We could see an extremely strong second half of 2021. And I think the stock market is anticipating some of that with this recent additional run-up. The market in November rose more than all but 4 or 5 months in the history of the stock market. I think it rose 11% in November. from memory. I might be wrong or slightly on that number. But so I think the answer is yes. And if you look right now at housing, and you look, for example, at autos, they are very strong right now in a way that you really wouldn't have anticipated looking back to March when the virus erupted, the lockdowns happened, and so forth. And consumer spending and the early data on Christmas sales between e-commerce and traditional brick and mortar retail is fairly encouraging. The economy is not doing nearly as poorly now as you would have thought it would 7 or 8 months ago. And that's because while the shock to the economy was massive in the second quarter, we had the largest decline in GDP ever recorded, the policy response was also massive, monetary and fiscal.